Let's move right on and bring on board the management of PNB Gilts to talk a little bit about their numbers. There was a loss this time around, largely led by the higher interest costs, and that came in at about 13 crore rupees. We've got Mr. S.K.Dubey to put a little more clarity on the quarter gone by as well as the outlook. And morning, Mr. Dubey. Thanks for being with us. Higher interest costs, that really seems to be the key factor this quarter. Can you just tell us as to what has really led to this weak performance and whether or not this is going to continue?
It's not actually an interest issue. It is largely due to substantial increase in yields. During the quarter, the yields have gone up by 67 basis points. If you see our performance during the corresponding quarter, Q3 last year, we made 100 crore due to the decline of yields by 30 basis points, against which the increase in yield has been 67 basis points during this quarter, and that's precisely why this result is there. So we have actually saved a lot of what could have been a greater loss.
Okay. Do you think then that the next quarter in FY19 may be a difficult year going ahead, given that bond yields will remain elevated?
Our performance, we are trying to improve by rejigging our portfolio, decreasing our portfolio, doing some short sales and some, whatever instruments are there at our disposal. But yes, this quarter also looks like a little challenging because, in 1 month also the yields have, in December, the yields have gone up by another 48 basis points.
Mr. Dubey, this is Siddharth Bhamre joining in conversation. Mr. Dubey, we, in markets we try to read a lot about, NBFCs when interest rate moves higher or lower. So if yield goes higher, we start talking about that how it is not beneficial to company like yours. And when yield goes down, we start, making a rosy scenario for prospects of company like yours. What, according to you, how much is the impact, say, if 10 basis point moves here and there, what kind of impact it has on your income?
For our portfolio, which is currently, as on December, 1 basis point move would make a difference of around 30 lakh rupees.
Okay, and what is the overall outlook, for the income going forward, at least in Q4 FY19, and what will be the key focus area of yours when it comes to earnings?
See, we have, as I said, we have rejigged our portfolio. We have reduced our duration, and therefore we are emphasizing on carry trades that we do in our system. Our cost of fund versus our gains from the yields. So less of trading and more emphasis on such issues. Plus a lot of short sales which are permitted in a situation like this, and that's precisely why we have been, we have done relatively. Things could have been worse, but maybe this quarter we might do a little better.
Mr. Dubey, hi, this is Mubina as well joining in. Now, I must ask you about the impact of the higher, the budget has, of course, estimated higher fiscal deficit for FY18, FY18 actuals as well as FY19, a bit of slippage in FY18. And as such, we have already seen yields going up. So what's the outlook, according to you, on bond yields over the next 3 to 6 months?
Yes, sir. Yeah, actually, yesterday the yields, the borrowing program was positive for bond market. The yield should have improved, but there are some concerns relating to inflationary trends due to certain things that are there. Once those clarifications there, maybe the market could stabilize. The borrowing program is positive for the bond market.
All right, Mr. Dubey, we leave it at that.
Going forward, things depend on yeah.
Go ahead.
Right,
Complete your point, Mr. Dubey.
Yeah, going forward, we are looking forward to what the RBI stance is there in the forthcoming policy, the international scenario, the US yields, inflation, and so many other issues. So much depends on how these things happen, but we are prepared for every eventuality, as I said.
That's good to hear. Thanks so much, Mr. Dubey, for joining us. Appreciate you giving us your time, as well as, of course, what your own outlook is on the yields.